Is the Kelowna real estate market in a bubble ready to burst any minute? That seems to be a question that I'm fielding a lot of these days. The answer that I'm going to give you may surprise you. All right, let's get into a market update for the Kelowna and surrounding area and see if the market really is going to tank like a lot of the naysayers seem to be predicting these days. All right, welcome to Live Love Kelowna. A lot has happened economically this year in Canada. We have seen inflation at its highest point in over 15 years. We have seen multiple interest rate increases by the Bank of Canada over the course of the last 12 months, which we haven't seen in decades. And there is a lot of turmoil across the world right now. And it would seem that all of this is having a massive impact on prices in the Kelowna real estate market. Now, that's what it may seem, but that certainly isn't the reality. And here's what I mean. All right, sales are down in the single family sector. In fact, they're down across all of the sectors, but let's focus on single family for just a moment. Sales are down by 24.7%, inventory is up by 15%, and the days on market is up to 60 days, which is an increase of about 25%. Now, but here is the kicker. The benchmark price is up 3% year over year. Now, I spent a lot of time in the Calgary market watching the ebbs and flows. The boom and bust cycle was almost predictable, as the booms would last about 3 to 3.5 years and the bust would be about the same. Now, this is with the exception of the last bust cycle in Alberta and the current boom that is happening specifically in Calgary. But that's a video for another day. In Calgary, what we saw during those bust years was a drop in pricing which would match the lack of demand or sales being down. That drop in pricing would also be affected by the overall days on market. The longer you're listed, the more you reduce to make you the most attractive home on the block. Now, increased inventory levels meant more competition, which meant home sellers would have to compete on price. Again, easily predictable. Now, there were 2 years where this did not happen, though, and that was around 2009 and then 2015. Now, what I've just described is not what we saw during those years. The market was flat, like it is in Kelowna now, but prices held, and those 2 years were not a part of the bust that took place. Okay, now back to the Okanagan. Now, we are seeing the same kind of environment starting to take shape here in Kelowna and the central Okanagan as a whole. Here's where I think the major difference between what happened in Calgary and what is going to happen here in Kelowna is. This market is not tied to one major industry that can have a massive effect on the market, such as oil and gas. We are also, as mentioned previously in other videos, restricted by geography, which does not bode well for builders to keep up with the demand or for them to overbuild for the demand, creating a massive problem with supply. The market here is definitely in a weird spot, but I am not waiting for the other shoe to drop like I did in Alberta in 2010 and again during the second bust in 2016. Now, past historical sales data for the central Okanagan shows that after a boom cycle, there is typically a period of balance. Essentially, the market goes flat. There is no major movement in pricing. In fact, when we look at this fancy graph here, you'll see that after the housing crash of 2007 and 2008, that there was a drop in pricing in the central Okanagan by the time 2009 settled out. So a little bit of a difference between Kelowna and Calgary there. Another big difference is what we see between 2010 and 2016 in the central Okanagan, and that was a 6-year period of balance where there was utter chaos in the Alberta market. Now have a look to see where we are at after the decline in pricing from the peak of around February to March of 2022. We are seeing the same kind of patterns that we saw in the central Okanagan in 2010. Now, if we look back to those years, there was more land to develop. Most of Kettle Valley hadn't even been built out yet, along with big parts of Upper Mission. There are entire neighborhoods in West Kelowna that weren't even under development at that point. So here we are almost a decade and a half later with a massive undersupply of land that is available to develop. Now, this is a big reason why I believe, despite the increases in interest rates by the BOC, that the Kelowna market may dip a little bit, but overall for the next couple of years, we are likely to see the same kind of stability that we saw previously. In fact, we could probably even make an argument for prices to actually increase due to the lack of ability to supply the demand. Now, the condo market is something else altogether, and I see the same thing starting to take shape here in Kelowna that happened in the Calgary condo market from 2006 to 2022. They overbuilt for the demand for condos in Calgary, and I fear that the same thing is starting to happen here. Now, according to the City of Kelowna website, there are currently 33 approved building permits for new apartment and townhouse developments here in Kelowna. It is difficult to tell how many of those permits are for rental units and how many will be for sale. But based on the data from 2022, we saw the majority of the 2,226 units built for the rental pool. I have to think that this is likely to reverse course in 2023. Now, I'm worried for a couple of different reasons. Number one, the pricing of these units is going to be much higher than that first-time buyer can afford due to the rising costs associated with the lack of trades and an increased cost of supplies and construction materials. Number two, there are fewer second home purchasers here in the central Okanagan due to the crazy increase in interest rates. And number three, with the changes announced by the government, the BC government, regarding rules around short-term rentals, you'll likely start to see the investor exit out of this market as well. Now, that makes for a perfect storm of lack of demand with massive oversupply to drop prices, not only on the new units, but also existing resale units in the city. Now, there are a lot of moving parts here for this perfect storm to happen, and I'm not saying it's going to happen. I am warning, though, that it could happen based on my previous experience in these kinds of conditions. It is certainly something to be aware of. So, what do you think? Am I wrong? I'd love to hear what you have to say in the comments down below. All right, so if you are thinking of making a move out of or into Kelowna, then we should probably have a conversation. Now, there are a couple of ways for us to connect. You can always call or text me at 403-827-7527. You can email info@livelovekelowna.ca, or you can click on the Calendly link in the description below and book a time in my calendar to jump on a Zoom. All right, we'll see you on the next video.